This is Nightly Business Report with Sue Herrera and Bill Griffin.
Gains fizzle. A 400-point rally in the Dow loses steam late in the day as reports surface of a raid by the FBI on the office of President Trump's personal attorney.
Facebook goes to Washington. CEO Mark Zuckerberg will tell lawmakers the company made a big mistake as scrutiny on the social media firm intensifies.
Odds of an audit. Some very good news for tax filers tonight, just days ahead of the deadline. Those stories and much more tonight on Nightly Business Report. It is Monday, April the 9th.
Good evening, everybody, and welcome. Well, it appeared as if stocks would start the week with a strong rally. But then late in the day, that rally that propelled the market much of the day disappeared. Many traders point to a New York Times report of an FBI raid on the office of President Trump's personal lawyer, Michael Cohen. Investors don't like political uncertainty, or any uncertainty for that matter, and stocks finished way off of their highs. The Dow added just 46 points to 23,979, but it had been up more than 440 points. The Nasdaq was up 35 and the S&P 500 rose 8. Stocks are clearly sensitive to headlines, be they political or trade-related, making this market particularly difficult to navigate and invest in. Mike Santoli has more from the New York Stock Exchange.
For most of this year, stocks have been stuck in a box. The S&P 500 has been darting rapidly day to day, but within a sharply defined range. The bad news is the index is now about 8% below its late January peak. The good news? The S&P is 4% above the year's low set exactly 2 months ago and has failed so far to breach that level despite several near misses. The market remains caught in no man's land by other measures as well. The S&P is almost exactly halfway between its high and low points of the past 12 months and has scraped against its 200-day moving average a few times, which is essentially the line separating a continued uptrend from a more damaging downturn. Valuation, meantime, is caught between expensive and cheap. The price-to-earnings ratio of the S&P 500 based on forecast profits is down significantly from lofty January readings, but is now exactly at the 5-year average. And broader global economic conditions have gone from quite hot in the wake of the tax cut law to somewhat lukewarm in the past couple of months, as Friday's more subdued jobs report showed. These mixed signals and jumpy volatility have understandably weighed on investor attitudes, as readings of sentiment have gone from extreme optimism to heightened caution. This newfound skepticism might be one factor, along with oncoming reports of good earnings growth and the simple passage of time, that Wall Street strategists hope will ultimately allow the market to start exceeding lowered expectations and rise toward the top of its range or beyond, especially if trade war rhetoric cools. For Nightly Business Report, I'm Mike Santoli.
Let's turn now to David Lebovitz for his take on the markets. David's the global chief market strategist at J.P. Morgan Asset Management. Good to see you again. Welcome back.
Thanks for having me.
It's still a very reflexive kind of a market. It must be very difficult to invest in this environment, yes?
It is. I think that there's a lot of headline risk. There's a lot of emotion. But as we look at what could catalyze the market higher going forward, we're really focused on the first quarter earnings season. We think the profit growth is going to be pretty good across technology, financials, energy, so on and so forth. And in a world where the news has been pretty mixed as of late, we think that profits could send a pretty positive signal as to the state of the U.S. economy.
And is it a global phenomenon, David? I mean, the global economy has been doing pretty well as the U.S. economy, certainly.
It very much is a global phenomenon. You know, the synchronized global economic expansion we've been seeing here seems to be feeding through into profits, not only in the U.S., but also in Europe, Japan, the emerging world as well. So we think that, again, this is really a global phenomenon and supportive of taking risk in things like equities all around the world. On
earnings here in the U.S., who do you think will do well? Give me sectors you think will be performing well.
So we think that technology should benefit from a weaker dollar and stronger global growth. We think financials should benefit from higher interest rates, and we think that energy should benefit from higher oil prices, which are up almost 30% on a year-over-year basis.
You mentioned, I'm just checking my notes, that the key things that you're going to be watching include how inflation reacts to all the fiscal stimulus that we're going to get. And we did get some numbers from the Congressional Budget Office today that told us something about where the deficit was going to be and all the spending. So weigh in on that if you would.
Yep, debt and deficits are definitely headed higher here. We think that could manifest itself in higher inflation. And the question is really, how does the Federal Reserve respond to that? Do they respond by hiking rates more aggressively and trying to slow down the pace of economic growth? Or do they let inflation run a little bit hot? I think they'll err on the side of caution and likely push back against this increase in government spending that we're seeing materializing at the current juncture. We haven't
mentioned trade yet. You have to be mindful, though, of the tit for tat that's been going on between the United States and China. How do you view that then? Is it an investment opportunity or not?
You know, to us, we're really focused on separating the signal from the noise. We're focused on those actual policy actions rather than, talk about the potential policy implementation. So we're focused on what the administration is saying, doing, rather than what they're saying as really a barometer of where the economy may be headed.
But that doesn't mean, and it certainly has proven in the last couple of months or so, that we still have an increase in volatility because you see that disconnect, at least initially, between what is being said in Washington and what is being done in Washington.
Exactly. So focusing on the real economic impact is going to be particularly important. At the current juncture, we don't view that as being terribly significant, but obviously this is a situation very much in flux, so we may just have to wait and see.
By the way, speaking of inflation, you happen to think that the CPI report now should be viewed more importantly than the jobs report, right?
Yes, I think that the Fed is looking at the labor market. They see that labor market is at full employment. So we're really focused on what happens with inflation, as that seems to be the missing piece of the puzzle.
So far. David, always good to see you. Thank you.
Thanks for having me.
David Lebovitz with J.P. Morgan Asset Management.
Well, as Bill mentioned, trade is still very much on the minds of investors. And today in Washington, the president's chief economic advisor made it clear that he thinks China is to blame for decades of trade misdeeds.
I don't like blanket tariffs. You all know that. But I've also talked for years about how China is getting away with stuff they shouldn't get away with. So this president's got some backbone, right? Others didn't. And he's raising the issue in full public view, setting up a process that will include, it may include tariffs. Hopefully it'll be mostly negotiations, but you can't rule any of that stuff out. I don't think this is damaging the market at all.
As we reported, the trade rhetoric, though, ratcheted up last week, with both sides threatening increased tariffs. Over the weekend, some administration officials softened the tough White House stance, saying that there is still time for a deal to be worked out.
However, China is not softening its stance. In fact, Beijing's trade talk is getting even tougher. Eunice Yoon picks up the story from there for us tonight.
The Chinese government signaled a shift in its position on the ongoing trade dispute with the United States. The foreign ministry today said, under the current circumstances, it's even more impossible for both sides to negotiate. This China-U.S. trade dispute was caused by the U.S., and the U.S. bears the full responsibility for it. The U.S. side is carrying the big stick of trade sanctions, and at the same time, they claim to want to negotiate. Who are they performing this for? The spokesperson wasn't specific about how the situation needed to change in order for the Chinese to engage the U.S. in talks, but this is a much harder line than what Chinese officials have been saying in the past few weeks. Just a few days ago, the vice finance minister told me directly that the Chinese are open for negotiations and that they would welcome U.S. officials like Treasury Secretary Steven Mnuchin to China. This is also a significantly different take than the Trump administration's. Just yesterday, President Trump himself tweeted, "China will take down its trade barriers because it is the right thing to do. Taxes will become reciprocal, and a deal will be made on intellectual property." Commerce Secretary Wilbur Ross has also suggested that this trade dispute would ultimately end in negotiations. We're going to hear more from the Chinese side when President Xi Jinping gives an address at a business forum tomorrow. He's expected to present himself as an international statesman, a defender of globalization, and also his speech is expected to be friendly and about economic liberalization. At the same time, most observers believe that President Xi Jinping won't want to present himself or China as one that is giving in to U.S. pressure. For Nightly Business Report, I'm Eunice Yoon in Beijing.
As China and the U.S. go back and forth, regional economies and local businesses are trying to figure out just how much financial pain they may have to endure if the threat of tariffs turns into a reality. Brian Sullivan reports tonight from Charleston, South Carolina.
The difficulty in talking about trade is that it impacts every segment of the economy. In fact, about 26% of the American economy at some point comes through a U.S. seaport. Like this giant container ship behind us, probably carrying more than $1 billion worth of goods just on one ship alone. There's so much volume moving through here that the Port of Charleston is undergoing a $500 million deepening project to accommodate the post-Panamax superships that carry goods to Asia.
The big trend in our industry is handling big container ships, so we're all trying to raise our cranes and deepen our harbors and strengthen our wharves and build new capacity because we do believe that trade's going to grow.
Savannah, Jacksonville, Florida, and the Port of New York have also invested more than $2 billion to make sure that the big ships can reach them as well. But trade and tariffs impact more than just big infrastructure projects and corporations. In nearby Holly Hill, South Carolina, Dean Hutto is a fifth-generation farmer. 100% of his soybean crop ships out of the Port of Charleston and primarily goes to Asia. For him, the tariff would not only hurt his bottom line, but also his community.
If we don't have that 25% in our pocket, we can't put it in the next person's pocket. And that's the trickle-down effect on, anything from hardware store or the grocery store, so forth and so on. 25%, I'm going to have to cut 25% of my spending, and I'm just going to pass that on down the line.
The Schooler Company, which buys and exports agricultural products, including Hutto's soybeans, says clients are paying close attention to the tariff tit-for-tat between the U.S. and China.
Soybeans have been kind of a bright spot in ag here in the United States for the last 5 or 10 years, so to have them be cut would really hurt the profitability of farmers and companies like ours. A bean is worth $10 a bushel delivered to the port here for the fall, and you put a $2.50 tariff on that, that's going to get their attention. That gives them cause for pause. It's created a lot of anxiety in the ag business.
For now, many here in South Carolina are a little wary, but they are not yet worried. It's a complex topic, but whether you're talking about a 5-person family farm or $1 billion in goods on a giant container ship coming from Asia, the one thing that's not up for debate is the size and magnitude of the discussion. For Nightly Business Report in Charleston, South Carolina, I'm Brian Sullivan.
Time to take a look at some of today's upgrades and downgrades. Morgan Stanley is raising its rating on General Motors to overweight from equal weight. The analyst there cites the prospect for an infrastructure bill, which theoretically could increase sales of pickup trucks, and that in turn could lift earnings. Price target raised to $48. The stock closed up a fraction today to $37.83. Intel has been named Evercore's Best Ideas list. The analyst there cites Intel's valuation, dividend yield, and risk-reward into earnings. The price target was raised to $60. Shares of Intel finished up 1.5% today to $49.55. And Comerica saw its rating raised to outperform from neutral at Wedbush. The analyst says that Comerica is the best-positioned bank in a rising interest rate environment. Price target was lifted to $111 today. Shares were higher at $95.55.
Still ahead, why despite all of last year's bad airline headlines, the quality of service is soaring to new records. The country's budget deficit will surpass $1 trillion by the year 2020. According to new estimates from the Congressional Budget Office, the deficit this year will rise more than 20% from last year. And that is partly because of the new tax law passed late last year and the funding measure to increase military and domestic spending, which was approved in March.
The Consumer Financial Protection Bureau may fine Wells Fargo as much as $1 billion for alleged abuses that took place in its auto insurance and mortgage lending units. According to Reuters, the fine would be the first since Mick Mulvaney was named interim director of the Bureau. The CFPB fined Wells Fargo $100 million back in September of 2016 to settle its fake account scandal.
Facebook CEO Mark Zuckerberg will testify on Capitol Hill tomorrow and on Wednesday on the data mining and privacy scandal his company is facing. He made his way to Washington a day early to meet privately with lawmakers. Kayla Tausche has more.
Mark Zuckerberg brought Facebook's apology tour to Capitol Hill Monday, trading his signature hoodie for a dark gray suit as he met one-on-one with the top lawmakers on both sides of the aisle of the two Senate committees preparing to grill him beginning Tuesday.
The message I wanted to convey to him that if we don't rein in the misuse of social media, none of us are going to have any privacy anymore.
It's the 33-year-old CEO's first visit to Capitol Hill, and it comes as the company is under fire after revealing how susceptible its platform is to breaches of customer data and trust. Zuckerberg's prepared testimony included a lengthy apology for its oversights and a pledge to take tougher action going forward, even if it means losing money, saying, quote, "I've directed our teams to invest so much in security on top of other investments we're making that it will significantly impact our profitability." He said there would soon be 20,000 people at Facebook working on security alone, though this week all eyes will be on the man at the top of it all. For Nightly Business Report, I'm Kayla Tausche in Washington.
Novartis continues to bet big on gene therapy, and that's where we begin tonight's market focus. In its second gene therapy deal this year, the Swiss drug maker said that it would buy biotech Avexis for about $9 billion, adding a potential drug for spinal muscular atrophy to its pipeline as a result. Novartis said that the merger will put a damper, though, on core operating income this year and next, but it does expect results to accelerate in the year 2020. Novartis shares rose 1% to 81.07. Meanwhile, shares of Avexis surged by 81% to $210.46. Pharmaceutical giant Merck said that its key cancer drug Keytruda helped patients with untreated lung cancer live longer during a study compared to those who received chemotherapy. The medication has already been approved to treat a specific type of lung cancer. Shares rose more than 5% on the news to 56.16. And we continue with more upbeat drug news. Pharmaceutical company AbbVie said that its experimental rheumatoid arthritis treatment met all of its goals during a trial, including reducing the symptoms of the disorder itself. Shares of AbbVie were up a fraction today to $90.48. Sue?
Bill, Viacom has reportedly asked CBS to raise its takeover offer by nearly $3 billion. Reuters says Viacom has requested an amount that would value it at just under $15 billion. As we've told you, the Redstone family, which controls CBS and Viacom, separated those two companies back in 2005 and has been pushing for the companies to merge once again. CBS shares were up a penny to $52.85. Shares of Viacom rose fractionally to $30.97. The conglomerate and investment holding company Leucadia said it was selling the majority of its meat and auto dealer businesses and changing its name to Jefferies Financial Group. The moves are meant to narrow the business's focus to financial services. Leucadia also doubled its share buyback to 25 million shares. Shares of Leucadia climbed more than 11% to $24.29. And the proposed $60 billion merger between Bayer and Monsanto will reportedly be blessed by the Justice Department on the grounds that Bayer sell additional assets. The Wall Street Journal said Bayer has agreed to sell additional seed assets and to make concessions related to its digital agricultural business in order to satisfy those antitrust concerns. Shares of Monsanto finished up 6% to $125.15. And Verifone Systems being taken private. The payments technology company is being acquired by private equity firm Francisco Partners for about $2.5 billion. Shares of Verifone soared about 50% in late-day trading. They fell in the regular trading session to $15 even. In
case you hadn't noticed, gasoline prices are on the rise. According to industry analyst Trilby Lundberg, the average price of regular unleaded is up 8 cents a gallon from the past 2 weeks. The increase was driven primarily by rising oil prices. The highest price in the contiguous United States, $3.63 in San Francisco, the lowest in Baton Rouge at $2.37.
Well, in a year marked by a string of high-profile airline incidents, it may come as a bit of a surprise that a new survey found service across the industry soared to a record high in 2017. So, which airlines flew highest In quality rankings, Phil Lebovitz has the results.
With a record number of people flying in the U.S., a new study says those travelers are getting treated better than ever. Baggage handling mistakes hit a record low last year. So did the number of people bumped from oversold flights.
I would have to say overall that the airline experience is getting better for most people, although there are still people that are disappointed.
Frustration that boiled over, leading to passengers clashing with flight crews. Last year, there were several high-profile incidents, including a passenger being dragged off a United flight in Chicago. Add in more complex fees for where to sit and what service to receive in flight, and you see why many people think flying is a miserable experience.
A lot of the complaints we get from consumers are about the pricing structures. Keep in mind, most people don't travel all that often on the airlines, and the occasional traveler is very frustrated by all of this.
The top airline for a second year in a row was Alaska, edging out Delta and JetBlue. By comparison, ExpressJet, Frontier, and Spirit were the worst in the airline quality rating.
One reason Spirit was last is because its complaint rate with the federal government is higher than other airlines. Spirit says its complaint rate is actually improving, and it also believes that this study fails to give the airline credit for offering low fares, which are popular with Spirit travelers. Phil Lebovitz, Nightly Business Report, Chicago.
Coming up, why having a conversation with your kids about money could really pay off. So have you filed your taxes yet? Well, if the answer is no, you have a few more days to get those done. And the good news is that the odds of getting audited are the lowest they've been in years. Robert Frank has details.
The IRS will receive over 130 million tax returns this year. But the good news for taxpayers, fewer of them will be audited. Cuts to the IRS staff have meant fewer auditors, so your chances of being audited have dropped dramatically, especially for the wealthy. In 2011, the IRS audited 13% of returns for those filers who earned $1 million or more. Last year, that figure dropped to just 4%. Those who make more than $200,000 have seen their audit chances drop from 4% to 1%. This marks a sharp reversal from the IRS under the Obama administration, when the group formed a special global high wealth group to target the wealthy who used companies and complicated structures to avoid taxes. Now, between 2008 and 2012, audits of the top earners jumped 50%. Now it's at its lowest level in recent history. Now, part of the reason is because of cuts to the IRS budget, which has cost the agency between $4 to $8 billion in uncollected taxes. But the wealthy still pay the vast majority of taxes. In 2018, the top 20% of earners are expected to earn about half of the nation's income, but will pay 87% of the income taxes. The bottom 60% of Americans will pay no net federal income taxes. For Nightly Business Report, I'm Robert Frank.
And finally tonight, did you know that having money conversations with your kids or grandkids at a young age can help prepare them to make informed financial decisions when they're older? Well, a new study found that the money lessons that young adults learn from their parents may be more beneficial than what they learned in their school's personal finance classes. Sharon Epperson joins us with some tips on how to approach that subject. Good to see you.
Good to be here. Good to be here.
Sounds easier said than done.
Yeah. It is easier said than done. You know, a lot of us want to have a conversation with our kids. We don't know where to start. We don't know what to share with them or what not to share with them. And we say, well, they'll just get it in school. And some schools are good about that, and they are offering them some financial lessons or even a personal finance class requiring that for high school graduation. But it varies so dramatically from state to state, and only 17 states actually require a high school graduate to have taken a personal finance class. So there's a lot that needs to be done at home. We can't just leave it to the schools.
What are they likely to learn in a personal finance class? What are the goals that they're trying to achieve there?
They're trying to help them figure out how to create a budget, how to save efficiently, how to make sure they have a retirement account. And when they have this financial education class in school, they are much more likely to do that, to have an emergency fund, to put that money aside or know that they should for retirement. But the numbers increase even further when they've actually learned that from their parents. When they've seen their parents do it or talk to their parents about it, they're more likely to have a budget or to have emergency savings or to know to put money in a retirement account.
And you know, I think after the 2008 financial crisis, when a lot of families were struggling, you know, when the stock market portfolios went down, when the value of the house went down, I know personally several people who had to have very hard conversations with their kids. And that, I think, would be almost more valuable than what you learn from a school book.
It's absolutely true. And what this recent survey from T. Rowe Price has shown is that these conversations should not be done at the very last minute. Right before they go to college, we're going to sit down, we're going to tell them how to manage their money, and then we're going to send them on their way. It has to be something that happens along the way and that it's talked about from your perspective. And so whether that's going over your pay stub so they understand how all of that works when they eventually get their own paycheck, or whether it's having a conversation with them about having to not have it right now, but you'll get it a little bit later. Delayed gratification, you know, is one of the most important lessons.
That whole difference between what you need and what you want.
What you need and what you want, exactly.
But I think it's important that they see how you manage money, not what you tell them to do about managing money, right?
Exactly, exactly. And as kids are becoming, of course, much more technologically savvy, show them the apps that they can download or the websites they can go to. One of my son's favorite ones is a coupon site, because then he knows if he tells his mother that there's a coupon for it, he's more likely to get it.
Yeah, but in my house, they have to the kids have to show me where the apps are. I don't find those
I'm with you on that. Sharon, it's always great to have you.
Great to be here.
Thanks so much. Sharon Epperson.
Before we go, a look at another day on Wall Street. A lot of volatility. The Dow was up more than 400 points until word got out about that FBI raid of attorney Michael Cohen's office, and the Dow finished up just 46. The NASDAQ gained 35. The S&P up just over 8.
And that will do it for us tonight on NBR. I'm Sue Herrera. Thanks for joining us.
Welcome back, by the way.
Thank you so much. It's great to be back.
I'm Bill Griffith. Have a great evening. See you tomorrow.